Hello, everybody. Welcome. Let's get started right away. Tesla's stock is up 4% to $347 per share. S&P 500 is flat. Dow Jones is flat. Nasdaq is up 0.6%. Russell 2000 is down 1%. Gold is down 2%. VIX is at 18. Yield curve is up a couple of basis points today across the curve. 2-year, 5-year, 10-year, and 30-year treasury yields. 30-year treasury yields are rising across the world. UK, Japan, a bunch of other countries also seeing their long-term borrowing costs increase quite a bit. Crude oil is at $63 per barrel. Natural gas is at 350. Today we got the mortgage applications index, slight increase overall, down refinance activity and up purchase activity, up about 10% year over year. It's pretty consistent with recent weeks, recent data. Let's read the Reuters article of the day. Any questions, comments, please request to speak. Otherwise, we're going to touch on a couple of things and then call it a day. S&P 500 directionless as investors focus on global trade moves. The S&P 500 wavered between gains and losses on Wednesday after a robust start to the week spurred by soft inflation data and the US-China tariff truce, as investors watched for trade developments during Donald Trump's tour of the Gulf states. Most mega-cap and growth stocks ticked up, with Nvidia among top gainers with a 3.3% jump. Advanced Micro Devices gained 5% after the chip designer approved the new $6 billion share buyback program. As President Trump secured $600 billion in commitments from Saudi Arabia during his visit, a number of US technology firms announced AI-related deals in the Middle East on Tuesday. Boeing advanced 2% after state carrier Qatar Airways signed a deal to purchase jets from the US plane maker during Trump's visit to Doha. 8 of the 11 S&P sectors traded lower. Utilities, down 1%, were the worst hit. US stocks have been buoyed by since the weekend when the US and China hit pause on their fierce tariff dispute, signaling a joint effort to stave off a global economic downturn. The biggest fears that the market's been having are the impact of Liberation Day and the tariff proposition that Trump put, said Lara Castleton, US head of portfolio construction and strategy at Janus Henderson. Quote, the fact that we were able to back down a lot sooner than many people expected and come to potential agreement with China was a big surprise and a relief for the market, end quote. Data released on Tuesday showed US consumer prices rebounded moderately in April. US Fed Vice Chair Philip Jefferson said while recent inflation data pointed to progress toward the Fed's 2% inflation goal, the outlook was now uncertain. Chicago Fed President Austin Goolsbee said the data did not necessarily reflect the impact of rising tariffs. Fed Chair Powell is slated to speak on Thursday, and his comments will be closely watched for clues on how the central bank plans to proceed with monetary policy easing. Meanwhile, the S&P 500 has swung back into positive territory for the year for the first time since late February. However, the benchmark index is more than 4% off the record peaks it hit earlier this year. The 90-day tariff pause announced on April 9 for countries other than China, along with solid earnings reports and a limited US-UK trade agreement last week, helped the benchmark indices claw back. American Eagle Outfitters was among the few earnings-related movements, dropping 5% after the apparel company withdrew its annual forecast, citing tariff-fueled economic uncertainty. Declining issues outnumbered advances by 1.6 to 1 ratio on the NYSE and 1.5 to 1 ratio on the NASDAQ. Great. Any questions, comments, please request to speak. Otherwise, we're going to touch on a few headlines and then call it a day. Nvidia jumps as Trump's Middle East moves open the floodgates. Let's look at that. House Speaker Johnson supports a stock trading ban for lawmakers. Boeing stock takes off as it scores its biggest order ever. Perplexity and PayPal partner to provide easy payment checkouts. Apple doesn't have to make products in US, ex-Trump commerce chief said. Retail stocks are still at risk of potential tariff-driven price hikes. Let's look at that one. Ex-Trump commerce chief, China thaw just the tip of the iceberg. New York sues Capital One for cheating savings depositors. Legal startup Harvey AI in talks to raise funding at $5 billion valuation. Interesting, as I started watching Suits. Gonna have to look into that on my own time. Sanofi to invest at least $20 billion in the US through 2030. Luxury sector faces more gloom as Bain cuts sales forecast. Let's look at that one too. Max streaming service is reviving the HBO name, the one it discarded 2 years ago. HSBC took out 10% of its workforce in France. Let's look at that one. Carlyle nears deal to sell Italian premium brand Twinset. Oil declines after biggest US crude stockpile gain since March. And we can look at that one too. I think that's probably about it. I also want to take a look at American Eagle as well. Okay, let's start with NVIDIA. NVIDIA stock extends gains as Saudi Arabia set to spend billions on AI chips. US moves to resign Biden's chip curbs. NVIDIA stock jumped 4% midday at Wednesday, extending its gain from the prior day when shares rose nearly 6% and the AI chip makers market surpassed $3 trillion for the first time since February. The gains come as US chip makers, including NVIDIA, announced billions of dollars worth of deals with Saudi Arabia during an investment forum attended by President Trump on Tuesday. NVIDIA said it will supply several 100,000 of its AI chips to Saudi Arabia's AI venture, Humane, over the next 5 years, beginning with the sale of one of its latest Grace Blackwell AI supercomputers using 18,000 of its advanced GB300 chips. Humane is a new AI venture owned by Saudi Arabia's $925 billion public investment fund and chaired by Crown Prince Mohammed bin Salman. It was launched just a day ahead of Trump's visit to the country. Bank of America analysts estimated the total value of the deal at $7 billion and raised its price target on NVIDIA from $160 to $150 in a note to investors Wednesday morning. Also bolstering NVIDIA shares, a report by Bloomberg on Tuesday indicated the Trump administration may cut a deal to allow the UAE to purchase more than 1 million of NVIDIA's AI chips. Fellow US chip makers AMD and Qualcomm also unveiled deals to supply chips to Humane for its ambitious AI data center plans over the coming years. AMD's deal was valued at $10 billion. Bernstein analyst Stacey Rasgon said the news is a good sign for demand for AI hardware. For investors worried about AI capex sustainability, we now have another deep-pocketed customer willing and capable to spend large amounts of money on a clearly strategic push as Saudi Arabia attempts to position itself as a regional and global AI hub, he wrote in a note to investors early Wednesday. While we shall see how much of the announced programs actually come to pass, Tuesday's actions have a potential to act as a support against fears of a capex peak. Investors have scrutinized whether US big tech companies can sustain unprecedented levels of spending on AI infrastructure, while companies are still figuring out how to fully monetize their AI products. Separately, SMCI, a server maker that uses NVIDIA's AI chips and server designs, announced a $20 billion deal with Saudi Arabian data center company DataVolt. That stock, which closely tracks with Nvidia's moves, rose 16% on Tuesday and more than 18% midday Wednesday. Great. So this is one of six articles. We're moving on to two, and now we're going to call it a day. Retail stocks are still at risk with potential tariff driven price hikes on the horizon. A US China tariff reprieve was averted a crisis for retailers, but they won't emerge from the trade war unscathed. Companies haven't known what problem they were trying to solve for, and that's a lot harder than even addressing the actual problem. Chairman Siegel of VMO Capital told Yahoo Finance. What Monday is doing is it's moving us closer and closer to at least knowing the problem. On Wednesday, American Eagle joined a slew of retailers pulling their 2025 guidance due to macro uncertainty. And companies still have to contend with enacting price hikes on inflation weary consumers. In April's CPI print, inflation for apparel and footwear fell 0.2% and 0.5% month over month, respectively. Yet so far, most stores have been selling inventory that was already in the US. The higher tariffs announced in April will hit imports that will be sold later. BNP Paribas senior US economist Andy Schneider said typically retailers hold about a month and a half worth of inventory in the US. As we look further into summer and maybe mostly fall, you're going to start seeing the impact of tariffs, KPMG US sector leader Tulip Rodrigo told Yahoo Finance. Though the 90-day pause that takes the tariffs on China to 30% from 145% has made the situation more manageable, it's unclear when a permanent deal will be reached and whether a higher rate will be reenacted in the future. Snyder said if those higher duties had remained in place, it could have led to pandemic style disruptions to supply chains. Higher prices would be a tough pill to swallow for shoppers as consumer sentiment tanked during the trade war. Siegel said with so many unknowns, it's hard to know which retail stock will emerge as a winner. You have to decide as an investor what you're looking for in a risk reward framework, Siegel said. I think that on extremes, a company like TJX or Planet Fitness are compounding because people are looking to them as share takers, and they can operate well in a tariff environment and an recessionary environment. CFRA analyst Zachary Waring said he likes Ross stores over TJX given the valuations of the companies. Off price as a category should benefit as consumers seek value, Rodrigo noted. Jimmy Choo and Michael Kors owner Capri has been highlighted as a potential performer. Siegel said he likes the company, especially after it agreed to sell Versace to Prada for $1.375 billion last month. The move will generate a meaningful amount of cash and pivot the company from a net debt business to a net cash business. Okay. Three more articles. Luxury sector faces more gloom as Bain cuts sales forecast. Sales of luxury goods worldwide are likely to fall between 2% and 5% this year, consultancy Bain and Co. forecast on Wednesday, sharply downgrading its previous estimate for 0 to 4% growth and signaling further gloom for the sector after 2024's 1% drop. Ahead of its closely watched spring report, Bain said the luxury market was experiencing a more complex turbulence across multiple axes. It cited economic pressures and price fatigue over the first 3 months of the year and noted shoppers were waiting for new, more creative products from brands. Bain's previous forecast for flat sales to 4% growth was issued in November. Top labels, including Gucci, Chanel, and Dior, have appointed new designers as the sector faces its worst downturn in years, with a property crisis weighing on the Chinese market and US shoppers pulling back amid economic uncertainty. The new forecast comes as the industry braces for further economic turbulence following the global flare up in trade tensions. While the large majority of luxury shoppers polled by the consultancy, 75%, said tariffs would not likely cause them to make fewer luxury purchases in the future, Around half of those had already pulled back over the past year, said it was due to price increases in the sector. Many larger brands capitalized on the post-pandemic surge in sales to make the biggest ever price increases in recent years, analysts said. Executives of designer fashion brands had hoped at the start of the year for a US-led turnaround after improvements over the end of the year holiday season, but by mid-February, signs of weakening demand in the US began to emerge. Okay. HSBC took out 10% of its workforce in France. HSBC plans to cut 348 jobs in France through a voluntary redundancy scheme amounting to about 10% workforce in the country. The job losses are part of a cost-cutting drive led by CEO who aims to reduce expenses by $2 billion by the end of 2026. Okay, we're going to skip that one because it's too small. And the final article. Oil declines after biggest US crude stockpile gain since March. Oil dropped after government reports showed US crude inventories rose by the most in 2 months, overshadowing the lingering relief from the trade truce between the world's two largest economies. West Texas Intermediate dipped more than 0.5% to trade near $63 a barrel after gaining almost 10% in the prior four sessions. Global benchmark Brent hovered around $66. US crude stockpiles rose 3.5 million barrels, the biggest gain since March, the EIA said Wednesday. Um, the bearish government data stalled a rally spurred by US-China trade detente and President Trump's hostile rhetoric on Iranian supply. Trump reiterated Wednesday that Tehran can't have a nuclear weapon, while the Iran's foreign minister urged the US to take a more realistic approach to talks. The friction comes a day after Trump said during a visit on Saudi Arabia that he'll drive Iran's oil exports to zero if a nuclear agreement can't be reached. Washington also announced new sanctions on a shipping network it said was moving billions of dollars worth of Persian Gulf states oil. Oil futures have rallied from the lowest closing price in 4 years at the beginning of the last week. They're still down more than 10% this year, underperforming major equity markets. Trump is visiting the Middle East this week, hoping to strike deals with countries including Saudi Arabia, the Kingdom, the de facto leader of the Organization of Petroleum Exporting Countries and its allies, has pushed the cartel to increase output to punish non-compliant members. A further boost expected at June 1 meeting would add to concerns about the surplus. The group's monthly report showed a careful start to those increases in April. OPEC and its allies added just 25,000 barrels a day last month, a fraction of the scheduled 138,000 barrels a day. Okay. Let me see if there's any news we need to discuss on Tesla. Toyota introduced an all-new EV called CHR in the US, range up to 290 miles, 75 kilowatt hour battery. Max charging port, peak charging speed of 150 kilowatts, 11 kilowatt onboard AC charger, 10 to 80% charge in 30 minutes, no self-driving features, and 338 horsepower. Okay. Um, Tesla FSD in Europe, highway approval expected to arrive in September, according to another Tesla app article. But this has been expected for several years, so who knows? Okay. I don't really see any other news. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.